Hi everyone, I'm Ifti from CLiK Trading Education. Welcome to our weekly market briefing, where we break down what moved the financial markets over the past week and what traders should be watching next. This week, markets were dominated by geopolitical escalation in the Middle East, a sharp rise in oil prices, and a surge in volatility. When geopolitical events collide with economic uncertainty, markets can reprice very quickly, and that's exactly what we saw this week. Let's take a look at the key moves. Looking at the market performance this week, the biggest move came from crude oil, which surged more than 21%. Prices moved from around $75 to above $90 as traders rapidly priced in the risk of disruption to global energy supply. Volatility also jumped sharply. The VIX index, often called the market's fear gauge, rose almost 20%, closing close to the 30 level. In equities, the picture was mixed. The S&P 500 fell modestly, while the Nasdaq finished broadly flat. However, the Dow Jones actually moved higher, suggesting that capital rotated into more defensive sectors. In Europe, the FTSE 100 dropped more than 4%, and smaller companies in the Russell 2000 also struggled. Meanwhile, cryptocurrencies rebounded, with Bitcoin rising more than 4% during the week. The most important driver behind these moves was rising geopolitical risk in the Middle East. Conflict involving Iran, Israel, and US military activity in the region raised concerns about potential disruption to global oil supply. This matters because the Middle East is one of the most important energy regions in the world. In particular, the Strait of Hormuz, a key shipping route for oil tankers, handles roughly 20% of global oil shipments. So when tensions rise in this region, energy markets tend to react very quickly. Typically, markets respond to this type of situation in a predictable way. Oil prices rise, volatility increases, the US dollar strengthens, and global equities come under pressure. All four of those patterns were visible in the markets this week. Energy markets reacted first. Crude oil moved dramatically higher as traders priced in the risk that supply routes or production could be disrupted. This type of move matters far beyond the oil market itself. Higher oil prices can lead to higher inflation because energy costs feed directly into transportation, manufacturing, and consumer prices. Rising fuel costs can also reduce consumer spending as households have less disposable income. If oil remains elevated for a prolonged period, it can even slow economic growth. So the key question traders are asking now is this: does oil remain above $90, or does the situation stabilize and bring prices back down? Another key signal this week came from the VIX volatility index. The VIX closing close to 30 tells us that options markets are pricing in much larger daily price swings. This is an important shift. In low volatility environments, markets tend to move slowly and trends develop gradually. But when volatility rises, markets become faster and more unpredictable. Intraday price swings become larger, stop losses are triggered more easily, and emotional trading increases. Professional traders often respond to this type of environment by reducing position size and focusing only on their best trade setups. Equity markets told an interesting story this week. Rather than a broad market sell-off, we saw divergence and sector rotation. The Dow Jones performed strongly, while smaller companies and international markets struggled. The Russell 2000 fell more than 3%, and the FTSE 100 dropped over 4%. This kind of divergence often happens when markets are adjusting to new macro conditions. It's an important reminder that markets rarely move in one straight direction across every sector. Gold and silver actually declined this week. That might seem surprising during a period of geopolitical tension. However, context matters. Both metals had already rallied strongly the previous week. So part of this move was likely profit-taking after a strong run. Silver saw a particularly sharp correction, falling nearly 12%, which shows how quickly speculative positions can unwind. This is a good reminder that even when the macro story supports a trade, markets rarely move in straight lines. Cryptocurrencies had a better week. Bitcoin rose more than 4%, closing around $68,000. Ethereum and Solana also moved higher. This rebound may reflect renewed risk appetite in the crypto market, or simply a recovery from oversold conditions. However, crypto remains highly sensitive to changes in liquidity and broader market sentiment. In the currency markets, the US dollar strengthened. reflecting increased safe haven demand. During periods of geopolitical uncertainty, capital often flows into the US dollar because it remains the world's primary reserve currency. The euro weakened against the dollar, while the Japanese yen remained under pressure due to the wide interest rate gap between the US and Japan. Looking ahead, there are two major drivers traders should keep an eye on. First, developments in the Middle East. Markets will be watching closely to see whether tensions escalate further or begin to stabilize. Any expansion of military activity could quickly move oil, currencies, and equity markets. Second, traders will be watching economic data and inflation figures. Key releases include US inflation data, Chinese inflation figures, UK GDP numbers, and commentary from major central banks. If oil prices remain elevated, inflation expectations could rise again, which may affect interest rate expectations globally. In volatile markets like this, discipline becomes even more important. At CLiK Trading Education, we focus on a structured approach to trading. First, understand the broader market context. Second, wait for clear, high probability setups. And third, always define your risk before entering a trade. Markets driven by geopolitical headlines can move quickly, and the goal is not to predict every move. The goal is to manage risk and trade with structure. If you found this weekly market summary helpful, please like, share, and subscribe so you don't miss our next update. I'm Ifti from CLiK Trading Education. Thanks for watching, and we'll see you next week.